What's your advice for people who are trying to find the bottom?
Don't do it. Just invest.
Will people ever find the bottom? Is it possible?
It's unlikely. I mean, it's important to just start investing. Most likely they'll miss it. Yeah.
You predicted that the recession will happen in less than 5 years. It happened in 1.5 years or more than a year after the video was made. The question now is, how long will this recession last? Is it something that will drag on for a very, very long period of time?
Likely maybe 1 to 2 years. But there could be changes depending on how the governments are able to come out with solutions. And the healthcare industry too.
For people who have cash flow, they still have their jobs, they have their emergency fund, they have extra cash that they don't plan to touch for more than 10 years. Do you suggest right now that this is one of the best times for them also to start putting in their money?
Definitely, yes.
At this point in time, equity funds, direct stock investing, broad market, broad people, what's your general advice? Where should they double down now?
Equity funds, as much as possible. Yes.
This is more of a probability. There's a high probability that we are gonna get into a recession sometime in the next 3 to 5 years. Okay, that's my projection. Primarily because we've been rallying in the equity market since 2009, so that's almost 10 years already. By next year, it's already 10 years. Usually in a 10 years time frame, there's usually a big crash happening, and the equity rally has been running for so long now, so it has to reset sometime. When it will happen, I don't know exactly, but I'm just saying that it could happen in the next 3 to 5 years.
So, guys, this is what we're doing in this vlog. No, I'll put a link below. There was a video where we had a person from Singapore predict, sabi niya, the market will crash in less than 5 years. There will be a recession. And here we are right now, more than a year after that video. We're back for a follow-up. If you have not watched that video yet, watch the video below to see what's gonna happen. But we have Jess Uy back in the vlog. He's gonna talk about this market crash. Feeling ko, Jess, madaming galit na galit sa'yo ngayon kasi ayaw nila mag-crash yung market. Predict mo nag-crash, nagkatotoo. So, first question, Jess. How long will this crash in the global markets last? By the way, for those watching this for the first time, Jess is a Filipino that's based in Singapore who's been in the financial services for more than a decade already. And he's going to give his insights in this video. So how long will this recession last?
I mean, it really depends on how the major economies are addressing all these issues. No, like, I mean, China, for example, has been able to contain the coronavirus already, so they're already back into full operating capacity for most of their major cities. No. Shanghai, those places are already 100% back. Beijing is around 89% back into operational capacity. But the thing is that the markets actually went down significantly when coronavirus hit the US, right? Kasi when things were happening in China, parang US is still partying and the world markets is still going up. No?
Pero yung figures ng China, is that something that people should rely on? Yung question din kasi baka the numbers that China that were putting out, the number of people infected, medyo in Tagalog, kaduda-duda or suspicious for those watching.
The numbers that I get are generally coming from the fund managers. So they're institutional investors. So I'm assuming that they also have their own due diligence to find out a little bit more about the real numbers. And regardless of what's happening, I mean, it's quite obvious already that they've kind of like opened up even the epicenter. No, they're starting to go back to normal. So maybe there could be some adjustment on the numbers, but I don't think it's a big of an issue. Although, I mean, there's always a risk because, I mean, these type of things can always come back, right? It's basically combination of two black swans. No, one is this coronavirus, right, and the other one is the impact on oil price, no, dropping significantly. These are things that we don't really expect. I initially, when we were talking about this, I was saying that it's probably if the interest rate starts going up significantly, then we'll probably have a recession. But I mean, things like this can also trigger recessions, no? Like things that we don't really expect. In fact, it kind of like reverse all the interest rates movement.
Since you mentioned now we don't know what will happen, will it get worse pa? Will this get worse?
It's likely gonna get worse before it gets better, right? I mean, the numbers that we're seeing in the US is not really at the peak yet. No, I'm actually thinking they will probably hit around a few million in terms of cases. Right, just now, right before our call, I just checked the numbers. They're already at around 535,000. So medyo marami na, and that's only in a very short amount of time. And the other thing is also because there's not a lot of testing happening in the US, right? So there are a lot of cases that are probably still not reported. So that's why I'm thinking the numbers will even balloon even further. No, so I mean there was one company who mentioned that they're already working on a cure or a vaccine. When I read the the forecast, it's like they'll only be able to deliver it probably around next year. But I mean, even at that point, it's not really confirmed yet because I mean they have to go through clinical testing and all these other things.
So the Dow dropped, pero it rebounded. It's up more than 20+% already. Is that rebound valid? Now we can see it already start to go up even further, or you think that's just a fake bounce, tas babagsak yung market? So my question is, have we seen the bottom already?
I don't really know what the bottom is, but the rebound, I think I have already expected it since the start, because anything that drops significantly will bound to have a rebound. No, whether it will continue to go up or down will highly depend on how the governments are handling the cases. So we won't know in real time. No, we'll know later on once after things have already passed. Although in my opinion, it's likely not sustainable because a lot of companies haven't really reported their earnings, and although a lot of investors have already priced in probably 6 to 12 months of negative returns, there could still be a lot of negative surprises. So we won't know until the US company starts reporting.
If I have money, I'm invested in global markets, should I buy US stocks right now?
My take is that when it's cheap enough, you start buying. You don't have to wait until the bottom because you never know when the bottom is. You buy in tranches or you buy continuously on a month-to-month basis. That's gonna be more or less my strategy.
The markets have bounced already. It's not as low as what it was 2 weeks ago. But at this level, do you think it's still cheap? People can already come in, or should they wait for it to retrace again and go lower as well?
So if I have a big lump sum and I intend to invest in the next 2 years, 3 years, right? If there's cash flow coming in, I can invest the lump sum, no problem, right? And then I just invest my cash flow on a month-to-month basis. But if I have lump sum, this is the maximum budget I will allot for this investment, right? I'll probably invest half and then cost average the rest, right? Because for me, it's cheap enough, but I don't know if the market is gonna go up or down. If the U.S. government or the governments of the world are able to find cure, then this rebound may continue and become a full-blown recovery. The likely scenario is that it's not gonna happen that soon.
Logically, the best time to invest talaga when it's really low. But at the moment when everything is so fearful, at the moment when you see stocks go down massively, how can you convince them to buy at that point? That's one. And number two, what do you tell people na bumili sila when everything was so high, it dropped, they're holding onto their position? How can you tell them na this is the time for you to come in even though bumili ka pa sa taas?
So for me, for the US, I have a bias towards technology. So a lot of my clients actually were invested in technology. And we use that as a proxy for the US growth. No? Kasi the technology sector is the one leading the market. No? You have the big companies, Apple, the FANG stocks, no, Facebook, Apple, Amazon. I follow more the Nasdaq or the Nasdaq 100 than the S&P 500 or the Dow, because those are the companies that I think will lead the market in the next bull run.
Okay,
Right?
so same context. They bought the Nasdaq when it was up, when it was high. Naipit sila ngayon. And then when everything is fearful, what do you tell them also?
Well, if they believe in the long-term growth of the companies that they're holding or the fund that they're holding, then they should be buying when it's cheap, right? By the fact that if they start buying now, then that means that their average cost will drop significantly. So when there's a rebound, it's a lot faster for them to recover, right? But before they start doing any of these things, there are a few guidelines that they need to ask themselves. No? Are they ready to take advantage of this opportunity of a lifetime to invest in equities, right? Secondly, they also have to check if meron ba silang, are their income sources stable? Is the job stable? If they're an OFW, do they think they will be able to hold on to their job, or do they think that their company will start slashing jobs? No, if their job is stable, then they should definitely start investing, right? If their job is unstable, then that's another story, that we have to do a little bit of a tweaking, right? And then of course they have to take a look at their cash flow. These are the few things that you have to take into consideration. Then what are the government measures that are being implemented, right? Government support for the economy will have a bearing in terms of how fast the economy recovers, right? Because if they're able to stay afloat, then when there's finally a recovery, then they can bounce back really, really fast, right? Then of course, other things, normal stuff for personal finance, they need to check their assets, liabilities. Can they afford long-term commitment to achieve their financial goals, for their children's education, financial freedom? Do they have the risk appetite to go through all this volatility in today's market? So these things are important questions to ask yourself. If your answer to all of this is yes, then probably the last question is that, have you opened an investment account if you don't have one? If you have one, then obviously, did you top up to your investment account, right? To buy equities, for example. That's very important. And then I guess the last thing is that, again, like what I mentioned earlier, you need to start investing, then wait, instead of the other way around. Yes, it's scary, but that's where the opportunity is, isn't it? Each person's courage to invest during these times will really be tested. And that's why it's important for most people to do proper financial planning. You'll realize that some people are just selling at whatever price. And some could be panic, but some could be actual need of money, right? Because some people, they will sell because they are over leveraged, or they invested money that's not meant for long term anyway, right? And let's say somebody got infected by COVID-19, so that means there's a lot of medical costs. So whatever the price is, they will just sell. If they lose their job, whatever the price is, they will also sell, right? And these are things that are very common nowadays, right? So if this is what's happening, then obviously the sell down will continue. And then obviously the other things that you also need to factor in is also the rise of what you call this, computerized trading, right? And then leverage, right? That's why if you look at the movements, right, the volatility is very, very strong, very, very fast in different directions. It's because there's also what we call deleveraging, right? People and institutions are forced to sell off in a way. So that's why the drop is significant. In the Philippines, it dropped like 45% in one month, right? So that's that's already a very bad, it's one of the fastest in history, not just in the Philippines but also in other places.
Just to give context to everyone, so if they fit all of those qualifications, they have cash flow, they have cash, they don't need the money. Tama ba? You're saying at how many years are you saying that they should hold on to it?
My general advice is for people to have at least a 5 to 10 year time frame.
People have a 10-year time frame. They don't need the money. They have cash flow. They have savings. This is extra money. April 12, 2020, you're telling na okay na rin, they can come in right now, especially if their time horizon is long and they just wait for it.
I mean, at the end of the day, in the long term, whatever price that you're buying today, it won't really matter much in the long term. Of course, there's a difference if you buy at the bottom and you buy somewhere slightly above the bottom. But it's still going to be a significant upside over the long term.
What's your insight naman for people who are trying to find the bottom?
If you have a long-term time frame anyway, then, you know, there's no need to wait. You know, you just continue to buy. And if you just want to have to feel better that you bought at a better price, probably just spread your investment, right? Maybe invest 50% of your budget now, and then the rest you spread, you know, monthly to kind of like get you a better average, right? So if the market goes down, then your general average goes down, which is good over the long term. If the market continues to go up, your general average is still skewed towards a better price because you have a much bigger base that you started on, which is the lump sum that you put in, right? So I think either way, it's a good time to start, right? But you need to be prepared at least for the next 1 to 2 years that it may extend. We don't know how long it will extend. It depends on the preparedness of different countries, right? For example, the Philippines, my understanding is that there's a lack of testing, right? And I'm assuming that that's going to be the same for a lot of emerging markets. So whatever numbers that we're seeing, in my opinion, is actually under declared. Everybody is not prepared, right? Even Bill Gates talked about this around in 2015, 5 years ago. Like the next recession will likely be some kind of virus or some kind of healthcare situation, and if institutions are not prepared, that's gonna be a big problem.
There's a system naman that people wait for a reversal to happen, not the bottom, but they wait for it to go and start to reverse. Is that something that you suggest also, or they don't have to do that altogether?
I'm not saying you don't do a lot of these different strategies. I mean, I also use technical analysis as a general guideline to kind of have a sense of, is it a good time to invest? For me, the most important is getting the best volume. It's not about the price for me. It's about the best volume. How much have you invested, right? Say you put 100,000. Okay, you put 100,000, you make a 50% gain. It looks very, very attractive, right? You have a friend who put, say, 1 million and make a 10% gain.
Singapore dollars to, ano? We're talking about Singapore dollars.
It doesn't matter if it's dollars or Singapore pesos, right? But in terms of the numbers, you look at the numbers, right? 10% gain doesn't look as attractive as a 50% gain. But because the other one put in 1 million, the actual return is 100,000. 100,000 beats 50,000, right? And so for me, it's actually the size of the investment, right? And in fact, during this time, I usually will recommend clients to invest in diversified assets, right? Like pooled funds, for example, because you never know which company will go bankrupt. And with the proper diversification, basically, you're protecting yourselves from this type of thing. So it's more like choosing sectors, but you are diversified in those sectors, right? I might recommend somebody to invest in, say, energy sector. If you just buy one company, right, in the energy sector, and they happen to go bankrupt, you're done, you're finished. But if you happen to buy like a diversified exposure to the energy sector, oil price now is very cheap, and eventually it will rebound. And once that rebounds, you participate in the rebound, right? So that's why my example for the 1 million, if they use the diversified portfolio set style, right? Actually, it's less risk but higher total gain. Those people who go direct stock market would be those who can their risk appetite is high, right? Now, if their risk appetite is high, they understand what is happening, then no problem.
At this point in time, kasi we don't know who's watching this, no? A lot of people, broad majority of people will be watching this. As the markets are down, what do you highly suggest? They just go the fund route na lang, or they pick stocks? So if you're gonna give a generic advice to people that will listen to this and you don't know them, you don't know their exact well-being, do you suggest they take the safer route and go through funds na lang, or do you suggest that they study first and then they go direct stock picking?
Generally, my suggestion is that you buy pooled funds as maybe the majority of your money, and then if you still want to go direct stock market, then sure, you can go ahead and just to get a feel, and then over time, if you want to do more, that's up to you. But at least for the majority of the money, I think they should do the pooled fund route, because it will protect them from a lot of uncertainty. Kasi for me, once the market rebounds, you start seeing already which companies and which sectors will do better. So then you can focus, right? For example, like today, if I invest today, and depends on the size of the money, right? Because if the size is not that big, right, then we can focus on just maybe one or two funds. But investing globally, there's a lot of different places that you can invest. You can invest in certain sectors like technology, or maybe artificial intelligence, or disruptive innovation, or healthcare, or energy. So there's a lot of different sectors. So you can diversify, right? Kung malaki yung size ng money mo. And then, after a while, you start seeing which sectors are moving faster because there's more momentum, and or there's something positive about that sector. Then you can start focusing on those sectors na as the market starts moving. Yeah, so that's that's generally what I would do.
There's a lot of talk that because the US government has printed so much money that investing in anything that's dollar based parang walang kwenta. There's a study that just go for gold na lang. What's your take in that? That because they've printed 200 trillion.
I guess.
What's the point of holding anything that's backed by the dollar?
Regardless of what happened to the value of the dollar, you're not actually investing in the dollar. You're investing in the company, or you're investing in the property, or investing in gold, or whatever asset class that you're invested in. You're not buying the dollar itself alone, like buying a dollar and then putting it in your bank account, right? You're not. You're just buying the dollar to buy something else. If you hold cash over long term, you lose value. That's why you try not to hold cash forever, because if you hold cash, then the value of your cash will definitely go down because of inflation, and over time, because of the printing of so much money, the value of your currency will definitely drop.
What you're saying is, as long as it's assets, whether it be stocks, bonds, real estate, etc., since they're not holding cash, but proxy lang yun na may value ng dollar or peso or whatever, it has inherent value. Yung delikado are people who have a large amount of cash na naka-store.
Yes. But that's unfortunately, most people don't understand this, right?
Okay.
Yeah.
So beyond that, people are pushing for gold. Would you say that since real estate will adjust, stocks will adjust, you don't even have to go into gold anymore?
I mean, if they're really, really, really conservative, maybe that will work for them, right? But the movement of the gold price technically is not really gonna give you ridiculous returns, right? I mean, it may give you some returns, but I feel like there's a lot of other gold-related investment that could do better, no? So, for example, mining companies will do better if the gold price go up, right? But I do understand that some people don't like the complexity of it, because technically you're not investing in the assets itself, you're investing in a company.
Tsaka my comment on that is also, you cannot have everything in gold kasi you can't use gold to buy food, you can't use gold to buy other stuff as well. You still need dollars, you still need fiat currency for you to be able to transact, or at least Bitcoin, pero Bitcoin is still not yet there as well. Anyways, what's your advice for people who are losing money right now? Regardless of what their investment is, if it's in the Philippines or in the US or in Singapore, what can you tell them? Kasi I don't know if you've seen it, that there's a lot of people who are depressed right now, there's a lot of people who are scared right now, and they're losing a lot of money.
If they're holding into equities, at this point in time, it's better to just hold on and go through the volatility, right? If they need help, they could talk to somebody that help them in terms of their mindset, in terms of their asset allocation. Because a lot of these probably, in my opinion, if they feel uneasy, it's likely because they haven't really planned for this, or it's not clear to them what exactly they're doing, right? Kasi for people who are invested long term, I don't think they will be panicking at all. When the market drops significantly, there are two types of people that you can see. One is that some people who are prepared for this recession will be very happy because they can just buy a lot of assets at a cheap price. The second set of people will be very, very sad because they just thinking that they might lose everything, right? Or they just don't know how low it can go, right? I even have one person ask me if her money will go to zero, right? And so I have to explain everything, right? It cannot go to zero because you're buying companies and you're buying big companies, and even if they go bankrupt, right, there is still value in that company and you can still extract something, right? These things are emotional in nature. You need to find you need to have good support system.
If there's one thing that I'll summarize from what Jess said, no, the most important thing you need to know is you need to know what your plan is. Kasi if you follow your plan, kung long-term ka naman talaga, then blimps like this should not be a cause for you to be scared also. That drops like this should not be a concern. That's why it's very, very important before you invest, before you do anything in terms of your investments, you need to lay out your plan first. So there. By the way, Jess Uy has a page. If you want to talk to him, I'll put the link below as well. Pwede na rin siya maging counselor, I guess, sa mga payong kung meron man kayong mga emotional concerns sa finances. But the link down below is a Facebook page if you want to connect with him after this video. So thank you so much, Jess Uy. By the way, everyone, if you have any questions, leave them on the comment section and we'll try to make more videos on top of this as well. Again, the goal of these videos is while we're on lockdown, while the whole world is stopping, you get to use this time for you to be able to build your skills. You get to use this time for you to be able to be equipped so that you do better and you get to trade the markets with confidence. So that's it for now. This is Marvin Germo with Jess Uy from Singapore. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.